2008 credit bubble, right? So in order for financial institutions to minimize the amount of cash that they have to bank up for the lending that they want to do, they're going to be more and more interested on making sure that whatever they're lending out to is as risk averse as it can possibly be, while still returning investment. You can't stop lending fully, but there's going to be ways and means of trying to do that, and trended data is going to play a part in that.
Okay. Got it. Okay. And, when someone uses, if I take the example of the mortgage market in the UK that you've mentioned, someone who's deciding to go to adopt trended data instead of the static score, is that coming with a hefty premium, i.e., companies like Experian are able to charge significantly more, or is it just the same price for this additional functionality?
I think it depends per client. Again, it's not, for Experian, it's not going to be straightforward. I can tell you that we will try and charge as much as we can get away with, but it's not going to be a case of it's not going to be a case of there's going to be a one-size-fits-all approach. So some of the bigger financial institutions that Experian does business with, it will be bundled into every contractual negotiation because these guys are spending millions of pounds with Experian a year. One of the biggest clients I think is spending close to 25 million pounds a year with Experian. I can't see Experian playing hardball with that client to say we want to get X number of pounds for trended data. I can see that being more as an offering, as a way to say, actually, if you move on from this product to this product, yes, there's a price increase, but we'll throw you trended data in within that product.
All right.
And it's an incremental price increase. Whereas I can see if it's a new client who's coming in, the price point's going to be a lot higher.
Mm-hmm. Okay. Good. So when I think about the verticals they operate in, right, and I'm thinking, mortgages, credit cards, personal loans, autos, telcos, etc. If I had to ask you, we're now drafting the strategy for the next 5 years. Which verticals do you want to go after with trended data? Where do you think adoption is going to be, significant? Which ones would you go for?
Well, that's a good question. I'd say unsecured loans and autos is probably high on my list. For two reasons. I think unsecured loans, as I mentioned, it's about trying to be as risk averse as possible, whilst having a healthy portfolio of lending. With autos, there's an interesting shift happening in the automotive industry in the UK, where the historic sort of way of borrowing is changing to a leasing model. and with that comes a number of different new challenges, right? I think trended data will be able to give you a better understanding of someone's ability to lease a vehicle and the risk of that you're going to have at the end of that lease than a static score.
But don't you think that an auto loan is riskier than a lease? Given on a lease you just I don't know, I guess it's whatever 3-4 years and then you take the car back. So your risk is basically these 3-4 years, whereas with an auto loan, you've got 100% of the value of the current risk.
Actually, you don't. So even with the auto loan, there's bubble payments at the end, so there's still values of the car left that you're not underwriting in there. The difference is that what you can afford on a lease is different to what you can afford on an unsecured loan for that vehicle. So, for example, if I was, let's take BMW as an example, right? So if I was going out and I was buying a 5 Series, my affordability on the 5 Series on a lease is going to be far greater than the affordability of that on an unsecured loan. So I might be paying, I don't know, £300 a month